Hello everyone, I'm Rob Smith of the Black Quant Edge VTF here, T3 Live with this week's market wrap up. And what a week it was for trading. Really a lot of good stuff out there, and I do a much more comprehensive breakdown of all the sectors and broader averages and stocks over the weekend. If you want to get that, you can contact us here at T3. I tweet a lot of stuff out at Rob in the Black during the day. But let's just take a look at a few things, and I like to stay on a few themes when I get on Friday. But S&P spikes. Yesterday they tried to hit them again, and that's all they could do. But if you look at the weekly, it's really doing nothing, right? Here Doji doing nothing, right? So when we come back to that 60, one of the good things that happened for it was here you can see here was the spike down, but it was still higher than this thing here, right? So it still couldn't take anything significant out. Comes back up, and so what we have here, you guessed it, inside day. So what's interesting for coming in next week is when you get all these inside days and the broader averages, whichever way they go, on Monday, new 60 minutes, new dailies, new weeklies start over again. And so either we're going to try and come right back up into the highs or reconfirm that sell-off by taking out the lows. If you go to QQQ, I believe not quite an inside day, no. And Q's a little bit stronger. You can see this, like they say the NASDAQ was down but for the week or so, or whatever for trading. But look at this, 1, 2, 3, 4, 5, 6 days they close higher than they open. So for trading, that's positive. And if you look at the diamonds here, another inside day for the Dow Jones, not doing much there. Small cappers here do this. Here's the broadening formation on here and go inside day. So the question is, if small capper is going to finally wake up and come ripping back through all this stuff, or does the dribble continue with the inside day? If you take a look at TLT bonds, and you can see the broadening formation very, very obvious there. And the sooner you start looking for the stuff like this, the happier you're going to be, because you can throw out a bunch of the false chart patterns, because this is how price action works. It's got to test highs and lows, and it's either successful or it's not. Higher high, test lows, couldn't break down, come up, test out the highs, couldn't hold, come out, test out the lows, couldn't hold, and once again you come back up and test out the highs, couldn't hold, and back in. So another thing that we saw this week is when you have the broader averages in general not doing much as far as moving around with this low VIX, you just go where the action is. And so we've had the tranny selling off here, and you can see the week for the transports like that, and you can look at stuff like FedEx and UPS. It just tells you where you want to be. And we also saw the financials pull in a bit here. FAS here, a little outside week to the downside here. So that's going to be a fractal broadening formation. And if we look at something like Wells Fargo, you're going to see it very clear. Higher highs, lower lows, higher highs, lower lows, comes up into here, and then drops in. So one of the reasons this works is because when people are on the wrong side, right, they have to have a discernible out point, right? And so that's why the bigger moves often come ripping through ranges, not into new highs. As you can see this, puke, 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 after down into here. And then once you get through here, is when you're at the reversal type area, because there's nothing to be long against. Everybody just got blown out against here and here and here. Then when they start coming up and ripping like this, you can see all the discernible things people try to stay short against. Here, 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 and you rip right through them. So Wells Fargo drops in a little bit on that stuff. XLP, and boy, all you got to do is hear Head and Shoulders on CNBC, and it's soon to be buying time. So it comes right back up once again, comes through all the discernible lows. Now an outside week back to the upside, and that gives some moves in like General Mills, a little Mondelez, all that kind of stuff, which can be a little boring, Pepsi, right? So what's not boring is knowing how to trade gaps, because when you have earnings weeks and things are moving, you want to be able to know how to go on that kind of stuff. You want to know what to look for. And you also want to know what to avoid, because usually, if you're trading actively, you like to trade some Tesla. And this inside week here, so oftentimes when you look at a chart and somebody's like, I think it looks like a this or that, all of this range is completely in this day's range. It's doing nothing. You're going to get killed in here, right? And that's not saying that there aren't a few moves here and there, but in general, when something is still inside on a longer-term time frame, you can expect it to reverse back and forth until that equilibrium forms. So for this week, a lot of nice stuff. Priceline price line was beautiful. And so one of the things you'd want to be able to trade is something that's doing this, just falling apart all day long. It had a nice 100-plus drop from the opening, and that's when you understand how actionable signals work and when you can get in on that stuff instead of just jumping in or saying, this thing's too much or too hairy, I don't trade price line. You made $100 off of one share. And the good thing about that is that as it drops, no matter what you have, you can look to add to your position, where some people will just take an initial position and then get out of it gradually. Ideally, what you want to do is build a position of something that's moving. So you're selling more of this thing as it goes down, not getting out a part of it. Another thing I want to talk about the actionable signals. You had Disney. And Disney, what I mean about the actionable signal is those equilibriums formed. I've talked about this on the Friday. Inside month for Disney. So that goes inside month to the upside, broke the equilibrium up above 100.98. Then if you go to the weekly, it was inside week to the upside here, above 99.46, which triggered the month. And then you had the earnings come out where they took it down over, but then brought it right back up. And so what we want to know is here is the close when the earnings come out. Right here, yesterday's close was 103.91. So after the earnings came out, it dropped. But once it comes back through that level, that's where it closed when the news hit. And so when that news turned positive, that's where you wanted to get it in the after-hour session, because then it reclaimed that level where the news came out. It was also monthing up and weeking up to the upside. You've heard about me talk maybe about RevStrat setup, and this is something you definitely want to know about, the reversal of the inside bar. So this was an inside bar. They tried to take it down, but get back into there. Once again, people have to have discernible outs. Here, 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 and here. Boom, took them all out in one shot. And if you look at here, just one example on how you can get in on something like this. Here you're going to see this, the inside bar 15 right here. Bam. That's an equilibrium. Now, if the buying had stalled out, it would drop back down. That's not what happened. Up, sideways measured, moving more. That was a real nice one. Last week I talked about the importance of the outside bars. And if you look at this ANET, last week, outside momentum hammer. And what that means is it's hammering onto the highs. They had their chance. The shorts had their chance to cover. A lot of the longs get stopped out. And when it comes back up through here, it's also a broadening formation because it's outside, took out both sides of the range. Right? And when it gets above that, anytime it's green on all time frames, it's go time on this baby. And that was a real nice one for us this week. Every morning I put out the gap list, and I mind the gap, hashtag mind the gap, at Robin the Black on Twitter. And these are really the things you want to focus on come the opening, because they're the things that move. Right? Now, some people will then be like, is it gapping up and going down or going the other way? Well, what we look for is we look for those ranges where we're coming ripping back through, right? And so oftentimes we're willing to go either way on them, but certainly in this environment with such a low VIX, you want to be able to focus and know how to trade gaps and know what's going on. So if we look at today, PBYI, gaps down, right? And so even if you're not going to trade really actively and say on the five-minute chart or what have you, you can even go back and kick back and say, wait for it to go inside on a 60-minute basis. And here, even on the 60-minute, it dropped from 109.30 down to 100. So there's $9 worth of movement to capture part of that. On the opening, OMER comes ripping like this, and like I said, not everybody's going to trade this actively, but we do. And this is a part of knowing how to find your way in something, right? Just when you want to be able to get into something that's moving and have something discernible outside of just jumping in there, right? And if you look at this, that momentum hammer inside 3, right here, there's a 3-minute chart, got that right there. And even if you put a stop on the lows of the 3s that are going up, you can stop yourself out right here. That's a nice move. Then it goes inside 3 again. Bam, you're back in. Then you take a low 3 here and say, okay, I'm out right there. That's some pretty nice percentage moves in the OMER. We also had gap and reverse in Hertz, right? And Hertz. So when something gaps up like this, another important thing to look at is what are we dealing with here? It was still red on the month when it did it. All right? It was still red on the week. And so when it gaps up, it's still red on the longer term time frame. So when it starts moving down, it's down on the month, week, day, and on the 60 for the gap and reverse, and it fell apart. It was real nice stuff in there, and that hurts. And then when something's really on the move, like the Roku, and the Roku, once again, you're inside 60 here, gave a nice entry, and that's 33.26, shot up over $3 in the next hour. And so there's a lot of ways to understand how to get in on this stuff, but you certainly don't want to ignore the things that are really moving, especially when the broader average is not doing so much. But what we do have is a lot of inside days to start off the next week, and like I said, I do a much more comprehensive breakdown over the weekend. If you'd like to get that, contact us here at T3 Live. Other than that, I hope everybody had a great week. I know we did, and I hope you have an even better weekend. All right, that's going to do it for this week. I'm Rob Smith, the In the Black Quantage VTF here at T3 Live with this week's Market Wrap-Up.